Alright, what's up? So, it's been a while since I updated this because I've just been so caught up in studying the patterns and whatnot. So, I thought I might as well create another entry and describe basically what I've been looking at. So, as you know, in past entries, I've been exploring the earnings gap down day two strategy, which is still a successful strategy, but the problem that I've experienced with it is how often it comes up. To find the perfect setup, I'll only find it like once every 2 weeks, maybe even less than that. And right now, because there's not many earnings coming out, but it's more effective when there's a lot of earnings coming out. So I need a pattern to actually trade when I'm not doing this, and so I've been exploring what most day traders do, which is our gap up strategies. I've also developed another gap down strategy, which I'll get into. And so basically, it helps me to visualize things. So what I did was I took out a piece of paper and I actually drew all the patterns that I'm looking for currently, and let me I put them on my wall. So let's go ahead and get into those. So over here we have the three patterns that I look at. So over here in the middle we have, so it's the day two earnings gap down recovery. So as you can see, this is the initial day. We see seller panic. We see a bad earnings drop, price drops. The first day we see slow consolidation, not much movement. We just see it slowly move down. In the market close between days, we just want to see a little bit of just no movement at all, maybe a little bit of upwards momentum. And then over here, we'll wait for a little bit of confirmation, and then we can take our position and then exit into strength. It's probably not a good idea to exit all the way at the top over here. You probably want to exit a little bit lower so that you get, if you're market selling, then you're getting a better order because there's still some strength. Now let's go to this one, which is a gap down recovery play. So this one also works with earnings, but I've noticed it works a lot with gap downs. What I see is we'll see poor news on whatever stock. We'll see a very strong seller panic sell off, but even during the, what do you call it, the market close, the price will start to recover immediately. And you can see into market open, it'll start to recover, and then it'll recover throughout the whole day. And that's a powerful pattern that I see, and you can some very lavish profits from that. So obviously you want to wait for confirmation and sell into strength. And the biggest thing here is don't be greedy, because with a gap down play, it can very easily turn the other way, and you'll go red. And then this is probably the most profitable pattern if I can start to trade it well. In the past, so far I haven't been trading it well, but now that I've developed a few rules for myself, I feel like I'll start to get better. And this is called the red to green move. So as you can see up here, it's called the red to green move. And basically what it is, we'll see a pre-market gap up. And what I like to see is a lot of times you'll see a gap up that kind of goes like this, and then it slows at the end. This one I want to see consistent growth throughout the market close, so that I can see some basically some momentum into market open. Usually what you'll see happen is you're going to see this quick sell-off right here. This is all the people that were invested down here, and they want to take profits now. So there's a strong sell-off, and then you're going to hit some type of resistance. And once this stock price breaks into a green move for the day, that's when you'll see a strong spike. Now, if I go into, so basically that's what a lot of people do. It's a lot of it's popular for beginners. It's a very popular pattern for beginners because it's reliable and it shows you a good entry, but that doesn't mean it's not profitable for the rest of us. So over here I have Thinkorswim open, and this is exactly what we saw here. So overnight we saw a very, here, let me zoom out a little bit. We saw a very strong, consistent growth, right? We saw some slowing at the end, but when I zoom in here, we see market opens, we see the price sell off, we see a bunch of resistance. It's testing this support level. It's going to keep pushing against it, and eventually it starts to move back up. And right here, over here, when it breaks this thing, it pushes all the way up to 1356 from 1180. That is a 10% move in a 1 minute candle. That's how effective this is. And obviously, when you're dealing with such fast moving stocks, you need to be playing with stop losses. Otherwise, you will blow up your account in no time. So that's what I want to be able to trade this pattern well before I put in too much size, because I don't want to lose a lot of money. That's pretty much it. I'm going to continue adding to this wall of patterns of the ones that I look at, and then determining which one's my A plus setups. These are basically all A plus setups for me right now. I'm obviously going to take over this. If I see this pattern, I'm going to be trading it over any of these two because I've done the most research on this one and I feel the most comfortable. And the reason for that is because it's a more slow moving stock. It's a more predictable stock for me. This one's probably my third option out of the, because first of all, right now, I hopefully this moves to my A plus set because this will be the most profitable. But that one, the gap down immediate recovery will probably be my second option. Again, because it's going to be more slow moving and more predictable and more time to react with this one. This one, obviously, the more risk, the more reward. So the better I get at this one, the more likely I will be to trade. That's pretty much it. Hopefully, we'll get better than this, and I'll try to keep updating these entries a little bit more, just because if I end up being a pretty profitable trader, it'll be a very good tool for people who are getting into it. So that's pretty much it. Thanks for watching, and I'll be back next time.